Hey, boom. We are live, ladies and gentlemen. Thank you for joining us this evening. It's been a while since we've gone live. So this is going to be a fun episode. I got a bunch of interesting things to look at. We're actually going to really quickly look at Russell Napier's breakdown, why the world of investing since 2020 has drastically changed. We've got some fun charts to go over and one or two just a kind of quick random updates. Actually, we'll do something fun at the end of this video too. That we'll leave live for a little bit. So let's actually go ahead and start with Russell Napier. So this link isn't in the chat yet, but it's going to be. So Michael Burry shared this. I thought this is a great little article, maybe about a 15-minute read. It will be in the links below. It's already in the private members group. But this is what I'm just going to highlight some things here. So he said 2 years ago, tide turned, and over the past 40 years of investing has vastly changed, and it is no longer valid. This environment will bring opportunities for investors, but they're largely different. We're going to see likely a capital investment in reindustrialization of Western economies, says Napier. So I don't want to go too far into this article, but it talks about some of the deflationary natures that we've been seeing kind of grow over the last few years. Largely, a lot of people see inflation. And this is on more of a consumer price product point. We could make arguments, and we have before, that largely every asset growth is due to inflation of the monetary cycle to some degree or another. So what's interesting here, he says, my forecast is unchanged. This is structural, not cyclical. This is much more equivalent to 1939 to 1979, when it did not be, when it's no longer a market guided by free markets. We are in the process of moving to a system where a large part of the allocation of resources is not left to market makers anymore. It's left to the government. The government plays a significant role in the allocation of capital. This is probably not great. The government's not really good at anything, especially if it comes down to the terms of redistribution of wealth, and the Federal Reserve is being put in an interesting position. So why is this shift happening? Obviously, we go over massive increases in the debt to GDP ratios. And if you're in the private group, we sent this newsletter out just a few days ago looking at some of the massive overspends that these governments have gone into, and then what this will likely end up as. So how is this happening? This is, we're on the brink of deflationary debt liquidations in 2008 when the entire system was crashing down. We've known that for years. We can't stand normal necessary recessions anymore. So this is important. We cannot stand normal necessary recessions anymore without fearing the collapse of the entire system. So the level of debt, private to public, and GDP has come down. So what's triggered this process? Now, the COVID crisis, governments have effectively taken over the levels of control of the creation of money, of how many billions they've given to Ukraine recently, just madness types of spending. So do you mean that there's always going to be another emergency? And the governments have done this really well lately. We've gone from one basically never-ending war against faceless, nameless people to a now invisible viruses. So this kind of contingency on emergency has been consistent for quite a while now. So it says governments will not just retreat from these policies. So to give you statistics, in bank loans, effectively 40% of all bank loans in Germany are guaranteed by the government. Well, that's crazy. France, it's 70% of all new loans. And in Italy, it's over 100% because they are migrating older maturing credit to new government guaranteed schemes. So just recently, Germany has come up with a huge new guarantee to cover the effects of the energy crisis. Hey, prices are really high, so I tell you what we're just gonna give you money. This gets dangerous. And I'm not gonna read the whole article here, but I just want to kind of preface some thoughts here before we get into the charts. Okay. And by controlling the growth of credit, governments gain an easy way to control and steer the economy. It's like, well, it's easier for them to credit the guarantees by contingencies and liabilities by the state, effectively controlling these ideas. But here's where it gets interesting. It says, I think we'll see consumer price inflation settling down into a range between 4 and 6%. Without the energy shock, we'd probably be there by now. So this means without the confusion and whether the energy shock is on purpose or not, we're actually probably settling back down to normal inflation rates already, but because of gas and disruptions in the line from societal difficulties. So this is the last part I want to go over. It says the slow part is in order for the pain not to become too apparent. We're already seeing economists and central bankers arguing that inflation should indeed be at a higher level than the 2% target they set in our past, and our frame of reference is already shifting up. So effectively, at the end of this, what we end up seeing is the fight against the saver, right? When they go and if they aim at, hey, 4% is not that bad, we're just going to inflate the monetary supply at a further rate so that GDP will nominally grow at this new 4% rate. What you end up getting is even more zombie companies. So companies that shouldn't be in business, that have been given these guaranteed loans by the governments that says, hey, we don't really give a what you do for business. We're just going to, we got your back. It's like you could be a totally fraudulent business apparently. And as long as you could afford their fines, they don't give a shit. So this starts to get really dangerous. We've seen other governments fall down this wayside in the past, but now as a global community, we're seeing a kind of a race against other governments. Everyone starts raising interest rates all at once. I don't know if you guys saw this. We posted a little while back. Actually, here we'll go into TradingView now too. So on the charts, we actually see Bitcoin, our favorite of assets in this economic storm that I think we've been in probably longer than I've been alive. It was one of the unique things about like just speculation, right? Like, speculation's been around longer than any of us. So we need to account for it. As a matter of fact, longer than any of us have been alive. And that's a little bit difficult to do sometimes because it might be a little bit more mature than we are in certain aspects. So we take a great presence of humility when viewing this stuff. But ultimately, what's really interesting and has continually sold me on all of this technology is sovereignty of any kind, whether it's in data or money or identity. These are all very important conversations, and more so, the regulation of the state has become overburdening and just grotesque in the relationship between corporations and the government, which is actually what fascism really is when you see collusion between corporations and the government. So if the government says, hey, we're going to give you blanket shield liability and immunity for whatever crappy products you make, that's fascism. That's what fascism is. It's a direct definition of fascism, right? So we commonly forget that we're actually going further and further into a fascist state when the government starts to take over the money control. So this gets a little abstract, but again, the importance here of why Bitcoin has been a North Star and guiding light for our portfolio for so long is because that macro story, I think, is far more important than most people realize. So we're going to scroll all the way down to the bottom here. I want to take a look at... let's start on the opposite end of the spectrum here. Okay, there's the civilian unemployment rate. Oh, did I not load up the treasury bonds yet on this one? No, I did not. Okay, so I've been looking at the U.S. bonds. The 5, the 10, and the 30-year, I think were the ones I was looking at. The government bonds, let's see. Here we go. Let's just do the 5 and the 10, and we'll add the 30 in there for fun. Okay. This is kind of an interesting add-on to the thesis. So right now, what you're seeing is the U.S. monetary supply. This is the increase of, the inflation of the dollar. Well, let's see here. Geez, how far do we get back on here? We don't get a ton of data, but we do get to go all the way back to April of 1959 when there was only $293 billion of monetary inflation going on. So effectively $239 billion in, let's say, paper or some type of bank holding. They've managed to increase this quite dramatically. Now, what's interesting here is that, first off, this is on a log chart. So here we go. This is probably what a little bit more people would expect it to look like. This massive increase where we go from $14 trillion in debt from 2018 all the way up to $21.8 trillion in debt in 2020. So this massive inflation of the monetary supply, it basically means the government has found a way to steal from you without you recognizing. They've been really good at offshooting the blame of inflation. It's Putin's fault, or they'll blame it on anyone, obviously, but themselves. They need their own livelihood, I guess, to get paid as government servants from your taxes. So they make up every excuse possible to make sure that you think that it was someone else that actually did the dirty deed. But what is it? Something like you smelt it, you dealt it. It's probably Joe Biden's fault. That's what I would guess. No, it's not his specifically, but it's the government at large for multiple decades now doing the same thing, making the same mistake over and over and over again so basically in lockstep. So as we look at the bonds, this is where I started to see something interesting I hadn't really pointed out before. So Well, first off, I think the 5-year. Okay, this is worth. I'd mentioned this multiple times throughout the last few years. Is that I suspect that when we start to get into the real tumultuous areas, we're going to see things that don't make sense. Like in the beginning of 2020, when oil went to negative prices, and you're like, wait, oil can go to below zero? I didn't even. And people got liquidated from positions that they had. Like, how did you talk about below zero? I didn't think it could go lower than zero, ladies and gentlemen, but it did. Did for a few reasons. Now, probably because their system is not very transparent, and just like there was 140% short interest that were taken out on the GameStop. No one's clearly, the regulators are doing a piss poor job. So you, Gary Gensler, and your horrible corporation or your mafia thugs aiming at our favorite ape friends, Jesus. But nonetheless, right now, the 5-year treasury yield is higher than that of both the 10 and the 30. This is when things start to make no sense, because usually the longer you would, let's think about staking, for instance. Most of you know, if you stake something in the DeFi world, the longer you stake said thing, the more yield you would get back in return. Yay! We're offering 4.2% interest. Although, mind you, if you open up a fucking American bank account, they're like, we're going to give you 0.03% interest on your savings account. You just get screwed as the consumer. But on the U.S. Treasury bonds, right now, the 5-year is performing better than the 10 and the 30. That makes zero fucking sense. Zero fucking sense, right? These are one of these areas now where the market is starting to do things that don't make any sense. You shouldn't be able to stake for shorter periods of time and get higher yields and rewards. The US dollar DeFi game is starting to do something that's probably a little abstract. We had looked at a while back of Warren Buffett buying treasury bonds. I said, I don't think this is a good idea. It may seem stable today, but we could go through very hard inflections based off this, like, hey, we're just going to guarantee that people will pay back based off, like, we're reputable. No, most businesses fucking fail to begin with. Like, you can't just make guaranteed investments. But these are the first signs, in my opinion, that things are starting to go wrong in the background. If you see a shorter term staking, offering higher yield, it just doesn't make any sense to those large investors anymore. And they start to go, wait, how did oil go below zero? This doesn't make much sense. So we'll just kind of quickly roll through some of this other data. One of the things that they're claiming here, as to the reason why the economy is strong and we're not in a recession, is that we're at such a low unemployment rate, and that this is like the positive thing. The government is the way the Federal Reserve and the government has been postulating this, at least in their open conversation, is very strange, because it basically says, hey, we want a bunch more of you guys to lose your jobs so you can't spend money on gas so that the price goes down, because inflation is your fault. I think they've even openly blamed it on teenagers one time or another. Probably like, it's Gen Z. They'll literally fucking blame everybody but themselves for the problems that they've created. So even though we're 2 quarters into a downward process for the S&P 500, we're apparently not in a recession because unemployment is so strong. And this is one of the things that they've been basing the idea of, hey, we can just keep doing this. So the next kind of step that comes in here is the effective federal fund rate. So you'll see on the right-hand side of my screen here. Can I zoom in? No, I cannot. It actually says 9.87%. Why do I not have a screen? I need like a way to easily zoom in. I'm sure there's an app for this where it's double click and it'll zoom in instead of having to do all this, or like a magnifying glass. I'm going to look for that. On the right-hand side, 9.4%. They raised the fund rates another 25 basis points today. So on that raise, we actually saw green candles across the board. So I'm going to get into the rest of the market breakdown here. Nice. As we see more Bear Family roll online. Thank you guys for joining us again. It's been so long since I've done a live update. I'm going to save some fun stuff for the end of this, and we'll do a live chat. We'll look at whatever you guys want. I know a bunch of the Bear Family was watching. You guys invested, and then now had at least a few days ago exited QNT as well, or Quant. So congrats. I wasn't even paying attention to that one. So good on y'all in the Bear Den for collaborating together and doing stuff. I love the community is powerful that way. So let's take a look now at the Dow Jones Commodity Grains. We've dropped back down somewhat, but general asset prices for the average person, this is one of the things I think most people don't take into account. It's like if you have or you make 250 to 500 grand, I think a year, you're in the 1% of the world's wealthiest population. And now if you get higher than that, smaller percentage, but that means 99% of the population is quite poor. And even it's so easy to spend a lot of money every year, but nonetheless, when grains are almost twice the price, this is what direct consumer inflation looks like, and it hits the poorest the hardest. Same with energy, as a matter of fact, although energy has recoiled from the early April Fool's kind of Russian jokes that have been going on, we are back down at around 146, but it's not a huge retracement in terms of energy. Energy is still it's down. We're down 20% on the general energy index, but at least from the beginning of the year here, we're still up over 100% in general in energy costs. Okay, so let's do oil now. Oil looks basically identical to the energy costs. You could make an argument that oil is energy, largely speaking, whether it's anyways, we'll continue. Wheat also still quite high, although down from its peaks early of that April kind of scare as well. And also the April-March scare here for just the general commodity, which is, this one's actually nickel. I don't want to look at these ones here, but we will go all the way back up to the top. And this is where things start to get more interesting for the bear family. Okay. So this is the dollar index. So the DXY has been just on a tear lately. Go back in a log chart, looks a little bit better. So we've been following along here with the bear family. This rising channel is quite interesting. There is definitely one heck of an area of resistance up here at around 120. So the big question is, does the dollar go to 120, close above, and then continue onwards? And there's a bunch of data back, but that says, even in the 1960s, prior to the Bretton Woods standard, we were only at $1.20. Like, it'd be hard to break past that resistance. I think you could see a run like this, and you did see it in the past. Like, this 1974. This is kind of the Volcker days, and this massive. If they put interest rates up at 20%, it's basically like having Luna offer 20%. We're just going to give you 20% extra on whatever US dollars you let us hold. They might do that. They might do that as a part of a way to try to bring in the central bank digital currency. So we could see even a bigger spike in the dollar index. I'm not going to argue that. These people are crazy criminals sometimes. At least that's what I think. I could be wrong. Allegedly, Chris. My lawyers tell me I should say allegedly, I think, with that one. But nonetheless, the dollar could go higher than 120 here. It definitely could. Hey, we're going to offer you 20% interest rates. All of a sudden, everybody's rushing into dollars. All the third world economies around the world are getting absolutely pummeled. Makes things a lot cheaper for Americans, which in their kind of picture view says, hey, look, inflation is getting better, but only in the United States. In fact, everywhere around the world it could be getting significantly worse. So I do think we're going to actually hit this area and then come back down to test this one more time. Now, that may mean that we only come back down to around 105, maybe even only not too much lower. Around 105, we'll say. But if it starts to break down below 105, you could see a further breakdown of the dollar. Now, this is all largely contingent on people's hallucination of confidence in these motherfuckers. Effectively, this is one of the hardest things to take in, I think. One of the things I always liked about Elon Musk's kind of joke about Dogecoin could be the future currency of the world, because why not? It's better than the US dollar. At least we know it's consistent inflation rate. It's not randomly freaking doling out capital to random people. It's a little bit more manageable than the US dollar. The US dollar everybody is high on some hallucinogen that they all agree that this is money, this paper is worth something because the government is la-di-da going to pay everybody back. It's madness, but that's how money works. Money is currency specifically. Maybe money's a bit more of a commodity, I think. Money has more of a feeling of a commodity, like a barrel of oil or gallons of gas or diesel or corn or gold or Bitcoin. Money feels more like a commodity, I think. It's not as easy as interchanging that oil for that liquid natural gas or whatever, but it's a commodity that can be used. It's more, I think, currency is a bit more transitory. The government seems to love this word, transitory, but currency itself seems to be more transitory. So it can be mimetic. It doesn't actually need to hold any value to it. It should be passed around like a hot potato. Part of the idea of currency is to keep the velocity going through the system, but the wires of that system have become so corrupt that there's hardly any energy actually passing through the economic energetic vessel anymore to the average participants. It just, if they stop printing dollars, everybody will go broke eventually. The Federal Reserve and the governments and the central banks let's just basically blame it on the central banks and the governments. In cahoots, the central banks and the governments have managed to destroy the economic system to a point where it's not a recognizable version of itself anymore. As Napier was saying, this is not a free market economy. It's that changed. Very specifically, that died in 2020. Doesn't exist anymore. So because of that, taking a different approach, I think, is important. The approach here is understanding that over time, what we're going to deal with is likely a loss in faith and confidence in the current U.S. federal government at some level, shape, or form. It's happening already. People started losing trust a long time ago. It's why some of the conspiracy theories sound so fucking crazy, is because, wait, how did you end up with multiple Bushes and Clintons? It's like, it's clearly either it's despotic. Yes, that's what it is. The U.S. government has ended up in a despotic state, and it's clearly visible to anybody who looks from the outside. It's still one of the best. I'll give you that. For all the American or U.S. citizens out there, it's still one of the best places because it highlights the individual's importance in the community as a whole instead of the community as a whole over the individual, which is, I think, probably a scarier evil than most people imagine. Is where communism and socialism, even fascism, seem to start to stem from, is people think that the collective overrides the rights of the individual. And that's really, I think, one of the failures of things like communism is in fact, you want people and their individual craziness to be allowed to do that as long as it's not harming anyone or breaking any laws like that. So as this faith of confidence starts to increase, the dollars will eventually break. Now, again, that doesn't mean we can't see something as high as 150 or 180 on the dollar, because they could go, hey, we'll give you 20% interest rates on your dollars stored with us. We know where most of them are. They know where most of them are anyways, and they're not in productive places. It would get this nice flood of US dollar back, and this is kind of what we're seeing as those other currencies start to fail. The Great British Pound, the Euro, the yen, everybody's rushing to the US dollar, being like, oh, this is the safe haven stablecoin. But I pose you a question. Do your homework, and you find me one fucking currency that has continued to hold a stable value of anything. When we had the interview with Do Kwon, is one of the questions I asked him, is like, all these pegs have broken. Do you think you can keep something stable? And when you look closely, it's like, wait a second, the dollar isn't stable, technically. It just appears stable in relationship to all the other fucking garbage currencies that are out there. It looks like hey, this shirt isn't covered in puke and shit and piss and blood. This is great. It's covered in most of those, but not all of them. Anyways, so the US dollar here we're not huge fans of. It's largely a hallucination by people, and there's no real value to it. The US government, at least in my opinion, provides no value. The US citizens, that's where all the value's at. Okay. This was an interesting one too. We've been watching gold, just kind of as let's say a bellwether. We might be witnessing a larger cup and handle that's taking place there. I won't make too much conjecture into the potentials for bull markets for commodities specifically, but let's go over and look at the Dow Industrial Jones. So this, on the other hand, both the Dow Jones and S&P 500, in my opinion, are in dire looking situations. So let's take off log so that this has more of the ridiculous appearance that it should. Just the straight up growth that comes with this monetary era that we live in. We always kind of reshare this one, but it's a comparison between the monetary supply and the Dow Jones. So we're locked in right now, not in log, but as we scroll in, we can see that the direct influence of the monetary inflation in the NASDAQ composite. So now, again, this is you can get into some pretty sticky details here about the actual growth of productive markets at all. if the government just gives money to the people that they think should be in business, is there actually any good business? It's a great question, and I don't actually know the exact answer, but very little of it. It would mostly be consumer relationships, like, hey, you want air conditioning? Like, yeah, I love my house climate control. That sounds fantastic, right? It's clearly relationships between products and consumers that generate value and revenue for people, but not all of it. Some of it's just garbage trash. They're on this list too. What is it? PFE and MR. Yeah, like Moderna. This is a trash company. This just belongs straight in the garbage. But not all of them do. So because of that, it's hard to make direct relationships between the inflationary process and something like the Dow Jones Industrial Average or the S&P 500. But it's pretty clear that the monetary inflation inflates all assets. So the S&P 500 right now is in a pretty precarious position because, from what I can tell, the majority of its growth has come from the inflation of the monetary supply. Which one of the 500 companies in the S&P 500 is actually worth anything? There may be a bunch of zombie companies that are living off nothing but guaranteed government debt here. Now, again, we get into the weeds of what that actually looks like, but the important part is the S&P 500 could come down quite a bit lower. And if that happens, it's going to bring pretty much everything down with it at first. Once it goes down, as things adjust, true value will usually come to fruition. One of the things I really liked about Napier's read here, and again, it's posted in the private bear den, but there's this one specific quote that I really, really loved. It says, it says, the only reason we've forgotten how this works is because most economists are trained in free market economics, not in history. And history is an extraordinarily important part of understanding how some of this happens, because even though free market is where we thought a lot of this was coming from, when it shifts into this area where it's no longer a free market and it's largely government-driven debt and speculation, it doesn't exist anymore. Investing has changed. So across the board, the S&P 500, though, let's take a little bit more of a granular look. We're in somewhat of a range here. Oh, I got to remove my monetary supply. Bang, like that. Okay. And just for fun, we'll throw on the bear claw and I want the 21 moving average in there. So, and let's go to the weekly because it'll just be a better story. Okay, so here's the 21 week moving average sitting at around 390 points, or 3,900 for the S&P 500. It's very likely we'll jump back up and touch this, and maybe even to the 404 position. This is going to be critical. If we come back up to 403 and we can't break above that, we're coming down at least to 320 pretty quickly. But they could just start printing again. They've actually been giving away a shit ton of fucking money, but just nowhere affects everyday spending. If you give $100 billion or some shit to Ukraine, like, it's not going to change oil costs in the United States. Now, it might change oil costs in somewhere closer to Ukraine, but not here. So that inflation, that money printing, that giving away of free capital that they've been going through, I don't know how many hundreds of billions of dollars now they gave to that country, it doesn't show up in this yet. But they can just as easily turn that printing press back on and have it affect this area. And they're inclined to do so at one point or another. This economy cannot handle a recession. Okay, I'll repeat that again. This economy cannot handle a recession. If you drop this economy low enough, it will break the confidence in everything, and the US dollar will be worth nothing. They know they can't have that happen. They have to walk this like fine line of massaging the hallucination so people maintain faith in their control over this economic vehicle. If they drop it too low, that will quickly turn into global riots and confusion and chaos and madness. Like, it would be hard to want to live in that world for anyone. So they'll pivot. They will pivot at one point. A lot of Michael Burry's tweets go over this. Shares the likelihood that we see this kind of whipsaw effect and that we do end up seeing large scale printing come back into the market. Now, again, where or when that happens was anyone's guess. There's a lot of room down for the S&P 500, but there's less room down for Bitcoin. Ultimately, one of the things I think that's interesting is that one of the theses we try to share is the idea of heads we win, tails we only lose a little. Now, I've made positions in my life where I've lost a lot more than a little, and those are learning lessons because it means I wasn't following my own rules. It's like, hey, it's actually pretty try not to lose it all. Right? It's a pretty simple game. Don't lose it after you've made it. I think that's Warren Buffett's quote too, is like, once you've made the money, don't lose it or something. First step is making it. Second step is not losing it. So being in volatile assets like Bitcoin, one of the important parts here that we're trying to do is not lose our money versus the fact that we know that the government is massively inflating. It's going to inflate all the prices, the reason why houses cost so much. How do you keep up with that growth? Even though Bitcoin, let's go back here, even though Bitcoin is down on the annual basis here, we're up significantly since all of our early investments. Being late to the party is never as fun as being early. It's like you get to early to the party, you might be a little bored too. Very often, actually, you end up walking away from the party because you think there's no party going on. You're way too early. Like a Bitcoin's only $200. You sell it all at 180 because you think it's a scam. It's actually being patient is probably one of the hardest games to play in terms of understanding the growth here. But because of that, generally over time, the best way to create any acquisition process is through time. It's not to go, I've got 1,000% conviction today, let me invest everything. It's better to draw that out over time. So this is Bitcoin on the log chart. Multiple times in Bitcoin's history, we've come all the way back down and reset this. So just for fun, let's compare to the monetary supply and then scroll in with Bitcoin. Now, it's hard to tell because they're not 100% correlated. I've seen some pretty good drawings, and I actually think I have those. I'll bring them up here on the other screen. I have seen a few good charts that do show a more subtle relationship between the monetary supply and Bitcoin. And I don't doubt that. I don't doubt that money printing has a lot to do with the inflation of all assets. People for the first time are able to trade. There's a number of confounding influences. People were stuck at home for many years. They'd never thought about working online. They need to work online. They're trying to figure out how to make money. Or they got to make money on investing. Oh, I should invest in money. People start throwing capital. The retail market runs everything up. And a lot of that came from the government just giving people money. I actually know at least 5 people that when they got their whatever checks the government gave them, the $1,200, they spent it right on crypto, like next day. So we know that the inflation of the monetary supply will go through retail's hands right into the market. It's why the market can have such monstrous growth processes. But what's unique here again is that over time, Bitcoin has performed extraordinarily well. I think the year-over-year average is something that's quite extraordinary. So the best way to recognize what's happening in the market is to go, the market's trying to take advantage of something that I'm not good at, or the humans are not good at, which is managing emotions over the long term between the ideas of greed and fear, or something like this. So it massively jacks up in price and retraces 80%, massively jacks up in price and retraces 80%. This is almost really the relationship between people's interest in something over time. You can't really get rid of speculation. Speculation is just part of human nature. People speculate on literally everything. If you could bet on 2 rocks at the speed at which they would move down the river, you would have a lineup for people betting on that if that was the only place that you could have that bet. Because people like to speculate on shit. We like to find out who was right. We would put some money or some skin in the game. It's a part of it's part of human nature. It's not going anywhere. So it's very, very likely to me that the very second video I ever posted on YouTube was me saying Bitcoin's going to $6 million. I roughly stand by that. I think we may go through a very strong period of I don't know what the right term for it is, because it's not stagflation. It's partially deflationary due to technology. There's a bunch of other headwinds out there. You guys know me personally. I've talked multiple times about the massive increase in excess mortality rates. I see prominent doctors talking about it now finally. these things, I have no clue what it does to the market when all of a sudden 20% more people on average are dying, like, or maybe not being born. Like, I don't know what that does to the market. Like, markets are largely made up of stuff going well for what people are buying. So who knows? Maybe this is all going to zero. Like, just as a forewarning, the future is unknown still. So just be aware. That's why tails, we only lose a little, but just be cautious with anything that you're doing in terms of investing, because we're at a very crucial point in human history. Some of the things I've seen go on in the background that I generally keep my mouth shut about is this the scariest thing I have ever seen in my entire life. And I like jumping out of planes. Like, I drive my motorbike at hundreds of kilometers an hour. Like, I've done some pretty scary, stupid stuff that I was never scared during. And this is like, oh my God. I'm like, what are people do? So I just want to keep in the tip of my mind here that this could all of a sudden turn south and smash straight into the ground. Like, the idea that the economic recession and collapse could take place, and all of a sudden, doesn't matter how much money you have, like, you're a billionaire, doesn't matter. That could happen. We could see that happen still. It's not out of the cards yet, right? The idea that the world that we know today will be the same in 3 years from now is like, it's not guaranteed. This is one of the least clear times of what I thought the history might look like in my lifetime. So one of the things that has stayed constant, though, is that generally my interest here is in free choice, sovereign money, identity, and governance. Probably some of the most valuable things in our human society and civilization, because right now I believe we have dire problems with the monetary and the economic system, the governance and structural system, and our identity system. I don't think a government should be able to mandate new forms of identity all of a sudden for shits and giggles. Because, like, hey, you need new identity for this fucking corporate fascist bullshit that we want to we think everybody should do because, it's for your safety. So because of those overarching stories and narratives throughout history that have repeated themselves, that Napier goes over very well, we want to be cautious as to the downstream side effects of what that might be, but also understand that I actually more scared than I am, at least because the things I'm scared of are actually, if we get rid of that, we're going to have one of the greatest bull markets and renaissances in human fucking history. We are poised to do so much better than we have as a society. And we've been held back dramatically by some of the safeguards that we put in place, where the wires are so corrupt, just no good signal is coming through. Like, no good shit's coming out of the government. Like, everything the government does now is just basically fucking trash. So because of this, ultimately what I think, like, the hopeful and the optimistic thing for me is that we're actually right. That over time, things like Bitcoin, the cryptographic technologies allows us to, maybe create our own identity and own proof of self instead of the government's version, is really what I'm here for in the long term. Is I think the technology solves that and creates a new renaissance of human civilization effectively. Because I think we've been held back dramatically from corporate fascist interests. And when I say that, I mean, I'm very specific about that too. I mean, when corporations and governments collaborate. Like, if your government's like, hey, we're going to give this company $2 billion to make some shit, that's called corporate fascism. It's exactly what that is. Even if they're giving grants to Tesla, it's corporate fascism. It's corporations and governments. That's what fascism means. Like, this relationship, now they're going to lobby. Anyways, the point of this is, I suspect that throughout this tumultuous change that we'll go through in the next 5 to 15, who knows how many years it might take to fully go through, we're going to end up in a place where people question the nature of governments, the monetary system, and how their identity is represented around the world. And that on the other side of this is when Bitcoin is at $6 million, because dollars don't really buy you a whole lot anymore. And it'll probably average out to around the same thing, where maybe, let's say one Bitcoin at $6 million will buy you the equivalent of a $500,000 house today, or something like this. So in real terms, what that means, I have no idea. But I have strong intuition that the change and the tumultuous things that come out of this end up in the favor of the ecosystem that we've been investing in. Could just be some hopium, I don't know, whatever. Try like these ones, trashflation, dragflation. You guys are, I like this. You guys are very, very witty here. Okay. Basically the end of my rant tonight. I just wanted to kind of go over that. There's a bunch of other stuff I could talk about. I just hadn't done a live video there was one more thing I wanted to go, two more things I want to go over in the charts at least. Okay. So one last thing in the charts here, and then the kind of special update I wanted to leave you all with as well. So, okay, boom, here we are. So this is Uniswap. And then let's put the 21 moving average back. So I've been going through, just looking at a few things. Big fan of the 21 moving average. I know we're not the only one. It's actually got a long history of being a pretty interesting area. Generally speaking, moving indicators are lagging indicators. You want to look, they'll tell you what you need to know after you need to know it, but you can use them to kind of spot some of the transitions. And right now, we're actually closing very uniquely right around the 21-day or 21-week moving average here for not just Uniswap, but multiple other plays. So let's go through here, take a look at some of those. Matic closing nicely, riding right in and above the 21-week moving average. Now this could fall below that too, but if we see another pump up here, now Matic's not the only one. Elrand jumped right up to the 21-day moving average and hitting a resistance there. Link is curled right up and onto the bottom of it as well here. So we're seeing some unique potentials. Fetch is below it. I think ApeCoin is still well below it. MakerDAO is closing above it with some strong candles on MakerDAO, over 100% since September. Look at this. Oh no, only about 50, yeah, around 50 to 100% since September is pretty good. Here, the Ethereum name servers too. And what's interesting is that these are actually bullish accumulations. This is on the weekly here, but this could pretty easily be an inverse head and shoulders, right? So now not only are we closing above the 21-day moving average, so we had our first kind of SOS close back down, and now a secondary SOS, which looks like it's going to move outside of the box here, probably as the S&P 500 continues up to around that 390 mark. So we're right at what could be at least some type of bear market rally. Now, what's important to remember, I've mentioned this many times, is that there's a literal fuck ton of venture capital money here that doesn't really know what it's doing and is trying to figure it out. And it's going to be investing in things like the Ethereum name servers. It's going to be investing in things like Uniswap. It's going to be investing in MakerDAO, because these are great products that have now to date withstood the test of time and are proving our Lindy ride quite well. The other thing here too is that if we go to the daily, here's the daily. Okay, so here's the daily on ENS. I would suspect we'd see a little bit of a test of the 49 and then a move back above. I do think we're going to get a breakout here for the Ethereum name servers, but we're a little too early for that. This closing on the 21-week moving average here that we've got circled will be important. So we'll see probably a few days of red come in next week, early this next week. Yes, or like Friday, Saturday. Hopefully it tests that and continues up. If it doesn't, we could be in a big down rush for a few things, but not everything. This space is new. Again, if we go back to Uniswap, I thought this was kind of a great example. Now, Uniswap's token doesn't necessarily offer a lot of value per se, so it's hard to say what the value proposition in Uniswap actually is, or why you'd want to own any of it for it to be worth something related to how awesome Uniswap actually is, because Uniswap was a goddamn breakthrough. But we're basically on the left-hand side of the screen right now. Actually, I should use my little zoomer. I gotta get this. My little zoomer. Boom, there it is. Okay, so here we go on the left-hand side of the screen. December 20th at $3.29. In the fucking heat of the pandemic, confusion and madness, locked up maniacs, 45 masks on their face, fucking shopping for toilet paper instead of groceries. Fucking Uniswap was only at $3.20. It did great, even at the peak when everyone was mad, scared, like, okay, $2.15. So here we are today. When we came back in June, somehow that fear had dropped us all the way back down to $3.40. Basically erased the entirety of the bull market for Uniswap and gone back down. This is hard to say we could go much lower. Like, I don't know how we get a bigger scare than March of the beginning of the pandemic. Like, it basically sounds impossible to me. It could happen, but I'm doubtful that we'll see something that scary. It could be, again, it could be liquidity events. It could be a whole number of things. If you start seeing bankers jump off buildings again, but even still, how much lower could something like Uniswap go? There's no JP Morgan buying Uniswap from inflated currency for decades prior to when it launched. It's actually, it's like these are like virgin assets comparison. They're not, the amount of people that are in there accumulating as in comparison that want to sell is actually quite low on the sell side in comparison. So we went up to $42 and retraced. We're back down at 6 here, closing right at the 21-week moving average. So I suspect that we might see a nice run up here, maybe even get to $11 for Uniswap before coming back down and testing any lower. I do suspect that on the weekly here, we're actually going to see a move back up into the oversold areas, because these are great assets still. Now, again, I don't know what the function of the Uniswap token is. It's hard. I would rather invest in something other than the token, I guess, at this point, because they're highly regulated out of making it useful in any way, because Gary Gensler's a bitch. I can do that, right? I can call people names like this, and it's not, as long as I don't call them a scammer, I think it's not defamatory. I can call you a bitch because or something like this, because I'm just calling you a name. I'm calling you a female dog, Gary Gensler. So because those people are screwing effectively with the nature of this market and the potential that's there, they'll never be able to put anything really productive back into the Uniswap token, from what I can tell, without getting in a lot of trouble. So the actual value of Uniswap's token is hard to say, but they just raised at like a $1.6 billion valuation, and it's amazing tech. So I suspect that because of that kind of misallocation of capital, there's a huge amount of new venture capital here, people that don't really understand the market, you're going to get you very easily get another big run in these illiquid tokens, and at the very least, the kind of bear market rally up to around $11.50. So I think we're going to see other moves like that throughout the market. There was, I think, two more I wanted to look at. Oh yeah, XLM was another one that was closing right around the 21-day moving average, and FTT still low here. But for those of you that study the Wyckoff range, tell me how sexy this looks. And if you watch Sam Bankman-Fried, he's always buying like 3 to 5 million. Like, I think once a week he buys like $5 million of FTT token on his personal account. So Sam's accumulating, right? And this looks like a beautiful, like, doesn't this look like you get a pop up above this, boom, and this all of a sudden becomes a new accumulation trading range? Now, again, we have to go back to Napier's idea here that we're in a different market than we have been for the last 40 years leading up to now. I don't want to make too many assumptions of what this new market looks like. But in the past, this actually was a very, very beautiful signal that we would be witnessing. This would be, if we see a break above this, that means we jump above the creek, and we're in a reaccumulation. We're in a reaccumulation phase for FTT. And FTX has been extraordinarily strong here. Technically FTT has performed better than Bitcoin in terms of like its loss. Although FTT has probably performed better than most things in terms of its actual value loss from the last year of data effectively. But this looks like it could be turning into an accumulation range. And you have Sam accumulating. So it looks probable enough. We're right at the bottom here. You get another quick spring or a volatility check here before you move back above the box. I'm going to be very interested to see what plays out here. We definitely fell lower on Bitcoin than I thought we would, and for longer. So we haven't invalidated my thesis, because I thought we could come down this low. I mentioned we would come down this low. But if we drop lower, then yeah, I was fucking wrong. So I'm not wrong yet. I'm going to say that I'm not wrong yet. Prove me wrong, market. No, I'll be happy if Bitcoin goes down even lower too. It just means we get better acquisition prices for, over time. So effectively, there's a long-term thesis here. I'm happy about it, but I really didn't think we would come down and stay down this long. So that's been impressive to me. But there are indicators that we are starting to see that this may be a localized bottom, and it's not just in Bitcoin. And again, I think the strength of FTT here was quite fascinating. Like, even though we could come lower, you got the owner of it all buying more. It doesn't get more like publicly available than Sam tweeting every week like he's buying another $3 to $5 million of FTT. I'm sure he knows where they're burning a few million of it too. So these things signal to me that we're pretty damn close to at least our little niche's market bottom. You have to remember that these things will fluctuate kind of regardless of what the society does. People get scared all at the same time, but there's an asset and it's being accumulated and there's limited numbers of that asset. The price is going to go up regardless of what the rest of the world is doing. It could go into all hell burning fire mode, and if nobody's selling, it's just the price is going to keep going up even if you have one buyer. So it's important to remember that kind of stuff. What was it? Oh yeah, Aave was also another one we were watching that was starting to flirt with the 21 moving average again. So again, what's nice here is you do actually start to see, let's make this line a little bit bigger so you can see my drawing. Boom. Okay, so here's a nice one. We could actually be in so this is actually usually a somewhat bullish pattern. It doesn't break out high, but it usually breaks out to around this area, around the 160 point mark. Sometimes it will go even higher. You'll see breakouts all the way back to the top. But more importantly, I think, again, if you see Aave here start to close above. So I think those are all the good indicators. ENS is what I'm watching. Aave, FTT, you've got a few in there that look strong in terms of kind of their flirtation with the market as a whole right now. Okay, so that's it. I'm going to leave all of you on with one special treat and update. This is for the private group, but we want to make a public. I'm really excited about this one, so I'm gonna find. Let's see here. So we're doing a private retreat. It's very limited in tickets. I'm going to post it in the links right now. So it's a first come first serve basis. I'll kind of I'll probably only leave this link up for let's do around 48 hours. That usually allows everyone in the community to see this video-ish. Maybe I'll do it in another video next week too. But okay, it's now saved in the description. It's the link to our private retreat. So I'll share this with you because we're going to scale this up. We're going to do it probably once a year. And I'll try to outline the vision of the mountain here for you guys. So between January 29th to February 3rd of 2023, we're going to be hosting a retreat in Costa Rica. We're going to be aiming at inviting individuals who work, build, create, develop, and fund within the Web3 sector. We've invited, we don't have confirmations, but we've invited people like our friend Miko from Gumi Cryptos. We've invited Michael Wagner from Star Atlas. We spoke kind of briefly today with the CyberKongs guys. They love the idea too. We didn't talk about them coming necessarily, but ultimately that's who we're going to invite on our end as speakers, workshops, generators, and we're going to continue to build and grow a community focused on, instead of conferences, more about like let's get down in the mud. Well, actually, this is not a muddy place. I'll show you the retreats there because I said mud like this is like some low class idea. So pick you up from the airport. We're going to have healthy meals every day, meditation, yoga, nature adventures. We're going to have 2 kind of late night ecstatic dance parties. If you've ever been to a Burning Man, you'll have a great time here. Thought leader presentations. There will actually be plant medicine available. One of the fun things about Costa Rica is psychedelic mushrooms are legal. So technically there will be something like a chocolate bar on each of your tickets or your table's bedside within the room. So we're having it at our friend's place at Selva. This is a beautiful place, a wonderful DJ setup, late night pool, like fresh squeezed drinks everywhere. It's absolutely gorgeous, and it overlooks the ocean. Yeah, there it is. You can kind of see the pictures here. We shared it briefly. Yeah, in the background. Wait, hold on. I found out I can. Yeah, there we go. I can actually zoom in with my other mouse. I forgot. So you can see the ocean off in the distance. There's a. It'll be fun. We can fit about 100 off-site tickets, although we're not selling any of those. That's only for like the presentation, workshops, people helping us build stuff effectively. So that's our inside stuff. But let's scroll all the way down to the bottom because I know most of you are gangsters instead. So we've got 25. No, we've sold it. We've got around 20 tickets left effectively. So not a whole lot of room. So if you want to get in there, because it's going to sell fast, I bet. And I'll take the link down too, because I don't want to sell too many. We want to mostly go with the private group effectively, but I want to let everyone at least have an opportunity. So the Kodiak rooms are awesome. Let's see if I book the Kodiak room. It'll open up here. Yes. Okay, so this is like a Bali. Wait, hold on. Like, there it is. Why can't I open that? Okay. Yeah, here we go. So this is like a Bali. Oh, right. Zoom in. There we go, Tio. Figuring out how to use my computer again, it feels like. Okay, so these are the private villas. This one comes with 3 tickets, effectively. So you can buy it all by yourself, but it comes with tickets for 3 people. So there's 3 beds, there's 2 singles beds, and then a nice king size bed at the top. Private bathrooms, private kitchen. Yeah, really nice area here that we're going to be hosting it at. So quite excited about that. Anyways, I just want to share that with you guys. Our long-term goal here is to again get more in like IRL community gatherings, and then aim at, again, we've got such a fantastic group of friends that are developers, builders, they're legal counsel, they're venture funds, and we really want to lean into getting all those people together to do ice baths, dance, and take mushrooms and build stuff effectively. So we hope that works out. That's effectively the vision that we're aiming at. And if you've got any questions, if you want to pay in crypto, because this is technically only taking credit card, I'd rather you guys kept your crypto. Technically speaking, like, we want you to be buying more of that instead of giving it to us. You can do that too, but we will accept crypto in any form that you want, but you will have to email us directly at info@arcanebear.com, and we'll help you go through that process with pretty much anything you want to go down the road of taking. We'll take Dogecoin. If you want to give us 10 grand in Dogecoin, we'll accept Dogecoin. We accept Bitcoin. We accept USDTC. I don't want to say anything my COO is going to get mad at me for. We don't accept PIVX. We don't accept, let's see, this is probably a bunch of stuff we won't take. But anyways, just some fun there. I do believe that. Awesome. Okay. Well, Bear family, I will take a look at a few of your guys' thoughts and questions. I'll scroll back here because I did promise you I'd do that kind of to close off. Oh, and I've got, actually, no, it's 7:30, isn't it? One sec here. Hey, Iris, do I now? Okay, well, I'm going now, ladies and gentlemen. We'll see you guys in the next episode. I appreciate you all. Bear family, we'll see you guys again on the next episode. If you like the live videos, I'll try to do at least one a month. I like doing the pre-recorded videos, the edited stuff. The vlogs are fun. I got to think about ideas ahead of time and put some effort into it. This is me freestyling and ranting, so we'll do this at least once a month to catch up with the community. I appreciate you guys, and then I'm gonna go because it's 7:30 now, and that's my cutoff time. We'll see you on the next episode.